August 2016, the European Securities Markets Authority released their semi-annual report. With all the political and economic turmoil the European Union is going through, the results are hardly surprising. According to the experts, the outlook for European markets is getting worse, and one of the major factors is Brexit. The referendum in which the British people voted to leave the European Union has had a profoundly negative impact on both the British and European economies. The pound and euro have fallen significantly in the aftermath, as much as 12% in a single day. This is even more alarming when you realize Brexit hasn't gone into effect yet. So what does this mean for you? As the world economy experiences turbulence, the U.S. market is inevitably impacted. Stocks are unstable. Bonds are losing money. The way things are headed, the dollar could be next. Call Goldco today and find out how investing in physical gold and silver can help protect your wealth and future buying power, even in the face of volatile markets and economic turmoil.
The U.S. economy has been in a recession since the first quarter of 2020, and there's a good chance that it could remain in recession for months, if not years. Gold is perhaps the most popular asset that investors choose to protect their portfolios during a recession, and that increased demand drives prices up. There are three major factors behind gold price rises during a recession. 1. Fear and uncertainty. 2. Flight to safety. 3. Investment hedging. So, when is the right time to buy gold during a recession? One of the great things about gold investment over recessions is the fact that gold continues to climb even after recessions are over. But when you're looking to buy gold, it's always better to buy sooner rather than later. That's especially true if you're planning to do a 401k rollover into a gold IRA. With stock markets still at high levels, you can lock in gains that you've already made in stocks, while still being able to benefit from gold's growth in the coming years. If you wait until after stock markets have started crashing, you risk losing thousands of dollars in potential investments. Not only that, but rising gold demand can lead to supply shortages of physical gold on the market. So if you wait too long, you may find that there isn't as much gold available as you might have hoped. Don't let this opportunity to put gold to work in your investment portfolio pass you by. Contact the experts at Goldco today.